You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 14th day of September, 2022. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every day. The first live broadcast is our live training room. That's from 9:30 a.m. to 11:30 a.m. Eastern. That live broadcast is reserved for members only and those who are taking their 1-week free trial. The afternoon broadcast is open to the public. Everybody, everywhere. Now there's 2 ways to join this afternoon broadcast, one a little better than the other. The best way to join, go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, fill out the registration form. It'll take about 30 seconds. And then, going forward, every trading day, you'll get an email before the broadcast starts with a link in it. When you're ready to join the show, all you have to do is click the link and it will automatically log you in. Now, the reason I say that's the better way is because it gives you access to the question box, so that you can ask questions and participate in the discussion. The second way to join the afternoon broadcast is to take any internet-connected device, your phone, your tablet, a PC, a Mac, wherever you are, anywhere on the planet, and point the browser to youtube.com/CFRN. Easy to remember, youtube.com/CFRN. Not only do we broadcast live each and every day on our YouTube channel, we also archive each and every daily broadcast. Currently, there are over 2,000 daily live broadcasts archived for your educational and viewing pleasure. So let's open with a word of prayer. Our scripture is Romans 12:16. Which says, live in harmony with each other. Don't be too proud to enjoy the company of ordinary people. And don't think you know it all. What happens to us, Christians, after we have an encounter with Jesus so immense it changes the course of our eternity, we lose our sense of who He is and why He came. Paul warned the Roman church in his letter, and he explained to them, and we would be wise ourselves to take note today not to throw people into different categories of Christianity. He was specifically referring to the way they were tempted to shut those out who they could not gain anything from. Ordinary people. Division always distracts us from the main thing, and the main thing is Jesus. He was crystal clear in dictating doctrine when confronted by Pharisees and very adamant about what the greatest command is. Love God with all your heart, and love your neighbor as yourself. Love God, love people. Life's not easy, but it can be simple. Today we run the risk of being written off altogether. When one group of Christians looks down upon another group of Christians. Now, the Bible is very clear about correction within the church. I believe it's important to make quick work of it and move on to the task at hand. Because reaching the far corners of the world is no small task, and it will take all of us. The seemingly important and the not so noteworthy. The fake Christians, the party crowd, and those not like us. Don't put it past Jesus to reach people through anyone. So let's pray today that we don't get stuck categorizing Christians when there are still so many people who have yet to learn who Jesus is. Heavenly Father, we come to you today, humbled and ready to remove any and all stigmas we have placed on other people. Father, we get so caught up in healthy boundaries, we start letting our pride, offensiveness, and impatience write people off our time card. We are reminded today, Father, that you punched the time card, author of our days and creator of our hearts. We surrender our lives anew to you today. We freely release our scheduled perimeters and trust you anew to design our days, knowing you are not a God of chaos, but purpose and promise. Thank you, Jesus, for your sacrifice for us. Thank you for allowing us to be a part of your plan for people. What a privilege and a joy to walk alongside others in this life. Thank you for placing us purposefully among other people. We trust who you have placed in our lives. We believe the community you set us in is where we are supposed to be. Father, when we get impatient and are tempted to quit, renew our strength and refix our perspective. Let us see through your filter of love. In Jesus' name we pray. Amen. And everybody said amen. Garrett's going to join us about 9:45 my time, 12 in his time, 12:45 on the East Coast. But let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 34 points. The NASDAQ is up 57. S&P 500 is up 9.5. The Russell 2000 is up 6. So pretty quiet, sideways, choppy trade. In the commodity basket, crude oil up $2.20, trading 89.51 last. That's a gain of 2.5%. Gold down $4.10, trading 17.1330 last. Silver up 12 cents, trading 19.61 last. In the Asian markets at the close, the Nikkei dropped 796 points, almost 3%. Shanghai fell 26, which is almost 1%. The Hang Seng fell 479 points, 2.5%. And in the European markets at the close, FTSE down 108 points, 1.5%. DAX down 160 points, 1.25%. The CAC down 23. So that gives us a red day in Asia, a red day in the UK. But so far, we have a green Radio Wednesday here in the US of A. However, I think you should be prepared for the markets to turn and for some more potential downside to come. But we'll talk about that more as we get into the charts. Let's go to Michael and get a recap of what happened this morning in the live training room. After that, I'll be back. We'll talk about the Logic 247 alerts, the Concierge Trade alerts, and again, Garrett will be joining us at roughly 12:45 Eastern. Michael,
Right.
I can see your charts.
Excellent. Here we go. All right. So, if you have not taken a free trial with us and you want to take a free trial with us, hang on, I'm just running through this list right over here. If you want to take a free trial with us and you have not taken a free trial with us, then go here to mytradingiq.com. Right here it says grab a seat for 5 days of training and trading. Click that. All right. And when you do that, you'll be sent a confirmation link, but we will ultimately send you all the information you need to get into the live training room in the morning. The room runs 9:30 to 11:30 a.m. Eastern time every single business day. If you're going to do that, you should. You really, really should. Come and download the platforms. Go here to platforms, download your platform. Send us the information that we request once you download the platform, and you'll be sent even more information. All right. Review the trade handout. These are the rules we follow in the room in the morning, and these are some videos of me following those rules. All right. These are live real-time videos from this year of me following those rules. All right. Spreadsheet. Now, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 14th day of September 2022. Made 22 ticks on the Russell, 31 ticks in crude. We were break even in gold, and we made 53 ticks on the ES. That put us at 1,082.5 on the morning session. We took 9 minutes and 2 trades this morning to get to the goal for the day. That went up $100 a contract, and we took a total of 26 trades this morning. So on the month now, that puts us at $7,535. So we're 9 business days, averaging $837 per contract per 2-hour business day. We've gotten our goal for the day on 175 days so far this year. That's every day. And we've gone 236 business days since our last negative day. And that puts us at $179,801 on the year, averaging $1,027 per contract per 2-hour business day on the year. All right. If you were to quit trading when you got your goal for the day and you were to add 1 contract a month, so far this year, you would have worked 28.18 hours and averaged $3,924 per hour on the year. Right? All right. We'll start out with gold again. We didn't really have much in gold, but everything we did have was either blue off of blue or red off of red. We had 3 blue off of blues right here. We took 1 of them and we stayed in it for the duration, pretty much until we got a break even on the last one. Either way, they both went about 6 or 7 ticks into profit, but I ended up with a break even on it. This one over here was a short red off of red. I ended up with a break even on that also. That went about another 8 or 10 ticks, it looks like, from the entry point. Really didn't have any more trades. There was 1 red off of red here, but that was during the break. Right, red off of red. So every red off of red or blue off of blue on gold today worked out. There were 3 of them, and they all worked out. There just wasn't a lot of movement on gold today. Okay, and that is the Z contract. Something is hanging up my computer right now for some reason. I just tried to minimize this chart and it didn't minimize. So let me see if I can bring up another chart. Right there, it did. Okay. Now we will go to crude oil. All right. Now, some of you may be noticing down here at the bottom, that there are different colors in the histogram. The yellow means it's due for a pullback to the BBC in most cases. That's what the yellow means, okay? But the black means it should keep going in the direction that it is. If it's above 0, it should keep going up. If it's below 0, it should keep going down. That's what that suggests, right? But with the crude oil, we started out here. Our first trade on crude was a break even right here. Then we had another break even. Then we had a stop out right there, pretty much to the tick, -10. Missed a red off a red right there. From the -10, we picked up 1 tick, went to -9. Then we picked up 6 and went to -3. And then we picked up 8 and went to +5. And then we didn't do anything for a little while through here until we get all the way over here. Crude inventories had come out at 10:30. And here we finally jumped back into it. Picked up 14 ticks here to get us to 19. then break even, then a 4 tick to get us to 23. Then 1 tick to get us to 24, and then it looks like 7 ticks to get us to 31 right there. As we're shutting down the morning, it did give some nice trades right here, all trend line trades, one there, one there. This one here wouldn't have worked out. That would have stopped you out, but it was followed up with this one. You could have gotten it right back, and then another one right there. So there were 4 or 5 good trades with one that didn't work out in that run right there. Then let's see, red off of red and blue off of blue. We had one blue off of blue right here, one blue off of blue right here, and both of them worked out just fine. Right, and that was crude oil. Now the ES. Let's back this out just a little bit and do that. Okay, so on the ES here, our first trade on the ES, we picked up 17 ticks on the first trade and 20 ticks on the second trade, and then another 7 ticks on the third trade. So we're at 44 right here. 19 minutes in, or is that 19? Yeah, 19 minutes in, we're at 44 ticks on the ES. So we got a break even right there. We missed a couple of trades, one there and one there. Both would have been winning trades. Blue off of blue, red off of red. The next one that we picked up was 17, 37, 44, 48. So we got a 4 tick trade to get us to 48. Then we stopped out. Oh, we had a 1 tick trade somewhere. 1, 2, 3, 4. Then a 1 tick trade somewhere to get us to 49. And then we stopped out, went to 39. Then we had a 4 tick trade here that got us to 43. Then it looks like an 8 tick trade. This was the moment in time that I did right here. Somewhere we had an 8 tick trade right here, I think, to get us to 51. And then we had a 2 tick trade to get us to 53. Like there was a 2 tick trade. All right. And since then, let's see, we had, I'm looking for just red off of red or blue off of blue here. And we really didn't get any of them. We really didn't get any red off of red or blue off of blue after that. Okay, we had that one there. We had this one right in here. That one, I'm not sure there was 4. But that was it. That was all that we had on the crude. It did give some pretty good movement today. The crude inventories did come out today at 10:30. So I had done a moment in time from 10:30 to 11, roughly. That's why I don't see any trades happening in that time frame. Let's see. I want to go back to the spreadsheet, I think. I don't see any questions popping up. So again, guys, if you don't ask questions in here, we don't know that you have them. All right. And that could be as basic as, why did you enter that trade? We don't know that you have the questions. If you don't ask the questions, we assume you know all the answers. Okay. So Dwayne's going to get into that too in just a minute. But anyway, if you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 14th day of September, 2022. Today we made 22 ticks in the Russell. I didn't bring the Russell over and show you that. We made 22 ticks in the Russell. We made, yeah, I'm trying to find my Russell chart. Here it is. 22 ticks in the Russell, 31 ticks in crude, break even in gold, 53 ticks on the ES. Put us at 1,082.5 on the morning session. Today it took 9 minutes and 2 trades to get to the goal for the day. That we're up $100 a contract, and we took a total of 26 trades. And that puts us now $7,535 a contract over 9 days, averaging $837 per contract for 2-hour business day. We've gotten our goal on 175 out of 175 days so far this year, and that puts us at $236 per contract, and 236 consecutive days since we've had our last negative day. On the year, it puts us at $179,801, averaging $1,027 per contract per 2-hour business day. So if you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, you would now be trading 9 contracts, and you would have only had to work 28.18 hours so far this year. You would have averaged $3,924 per hour during that time frame. Okay, now I wanted to go over the Russell too, because I missed that. Our first trade on this is where we got the goal right here. We got 20 ticks on this Russell trade. Then we had a break even right there, and then we got 2 more ticks right here. So this was a blue off of blue, and this was a red off of red. Okay, now the Russell did have a bunch more trades after that, but I got trading everything else after that. There was a red off of red right here. I'll just go through the red off of red and blue off of blue on the Russell. So it was a red off a red right here. There was a see, it's almost blue off a blue right there, but it's kind of crunched up. It's the same reason it wasn't a blue off a blue back there a little while ago, or red off a red, whichever one it was. This is white off a blue. It got really close to giving a bunch of trade setups, but it just didn't do it. It looks like, see, really close right in there. Even during the break, it was one blue off a blue during the break. So the Russell didn't give a whole bunch of red off red and blue off a blue. It did give a bunch of trend line trades though. Anyway, if you have not taken a free trial with us and you want to, go here to mytradingiq.com. It says right here, grab a seat for 5 days of training and trading. Click on that and you'll be sent everything you need to take the free trial. Come in here, download the platform, look at the trade handout, watch the videos, do all that stuff if you can bother taking the trial. It's good for you to know that as soon as you can. All right. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I'm ready.
Excellent.
Recap of the recap.
Today, 9 minutes and 2 trades to get to $100 per contract.
Good job.
Thank you.
Now, Michael told you how to take the free trial. Once you've taken the free trial, to get your passport, you go here to eminifuturestrading.com. That page is pretty simple. A couple mouse clicks, you become a lifetime member. Membership never expires. There's no recurring fees. It's your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. Now, the first thing you should do when you become a passport holder is read the 2420 blueprint. And it will instruct you on the things that you need to do. You need to be in class every morning, and you need to be trading in the simulator until you put together 10 consecutive days in a row in sim where you reach your goal in 10 trades or less. Then, and only then, should you even consider trading your live account. You've come to us to learn our methodology and our strategy. So to start throwing money at the market and just clicking the mouse willy-nilly, it's just the same thing that's happened to you every other place you've tried to learn how to trade. Same thing is going to happen. Okay? You stay in the simulator until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Then the 2420 blueprint will give you the green light to go live with one contract. Now that you're trading the live account, your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add your second contract. The difference between the first and second contract is the first contract is funded with your startup capital, but your second contract is funded with profit you earned in the market. The blueprint will tell you when it's time to add number 3, number 4, number 5, number 10. You only add one at a time, and you only add with profit you earned in the market. Now, while you have 2 hours of classroom training every day with a live instructor, it's an interactive environment where you're supposed to be asking questions because you're trading along in the simulator and you're not doing so good, and you need to figure out why. So you ask questions. 9 out of 10 traders fail because they don't have a teacher. You have one 2 hours a day. Above and beyond that, you have access to unlimited one-on-one private mentoring. If you don't take advantage of that, then you'll never learn the discretionary method of trading. And until you master the mechanical model, the discretionary method is not going to help you. So do things in order as they're laid out in the 2420 blueprint, and your chance of succeeding becomes much greater. That's as simple a way as I know to put it. Now, Logic 247. We're in week 215. Over the 215 weeks, we've issued 11,700 plus individual alerts. Every one of them a trend trade based on the 30-minute chart, price, and the BVC. So far this week, we've issued a total of 35 alerts, 4 never triggered. Still waiting on the outcome of 2. We've had 29 actionable alerts, of which 4 or 14% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders. The logic alerts come out around the clock. They could come out at 2 a.m. or 2 p.m. We have traders around the world. Our day session is their night session and vice versa. And the logic alerts are based on current price action. Our original alert service, the concierge trade alerts, are a bit different. Number one, they're based on historic price action. And when historic price action meets current price action, that's where you're going to find some of your best high probability, low risk trade opportunities. The CTAs are published not around the clock, but as a static report every evening shortly after the Globex Open. It is forward guidance for the entire session. There's 2 numbers for each market. We'll use the ES as an example. Last night at 6:15, if you trade the ES, you would have gone to your chart and drawn a line at 40.32 and drawn a line in the sand at 39.35. And make note of where price is at that point in time. Moving forward, if price starts trending up towards 40.32, that's bullish. So you look for opportunities to be long the market. If price starts trending down towards 39.35, that's bearish. And so our strategy will look for opportunities to be short the market. In either case, that's where you use Logic 247 and everything you learn in the live training room to yourself find opportunities to be long or short the market. Our goal is to teach you to be self-sufficient so that you never need someone to tell you when to get in and when to get out. Because you look at the chart, you see the windows of opportunity. Purpose of the alerts are simply to show you where windows of opportunity are. Both the CTAs and the logic alerts. They show you where there is a window of opportunity to utilize the skills you've learned in the live training room every day for 2 hours while you're trading in sim until you put together 10 consecutive days in a row. So we'll walk through each one of these real quick. If you want to take a screenshot, go ahead. And we'll get moving. Okay, we'll start out with a daily chart, as we always do. Whatever market you trade, you should always look at the daily chart before you begin your trading session. The institutional traders, the hedge funds, the Goldman Sachs of the world, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Their pockets are much deeper. They can withstand more of a drawdown than you can, and they have the ability to stay in a profitable trade far longer than most retail traders would be comfortable with. Now, price came up yesterday, hit the 50% reverse fib and the previous bearish cross. We spiked it a little bit, and then we all know what happened. The thing we've been talking about for weeks. Now, price closed yesterday just below blue and climbing. which is potential support. And I said that breaking yesterday's low was key to us making the trip down to the next logical area of support at the 24% reverse fib. What's happened is we've had an inside day, which is not unusual after a wide range day like we had yesterday. Coming down, blue and climbing, could have been potential support, but price closed below it. Now we have a different dynamic. Blue and climbing is directly above price, so now it is likely to act as resistance. So getting above blue and climbing could take us back up to the step line, which is at the 38% reverse fib. If we take out today's low, then we're headed for the low put in on September 7th at 3,900. The 24% reverse fib is at 38.88 and a quarter. This was the market's most recent attempt to break this downtrend, and it failed. So we got a leg and a retracement, a leg and a retracement, and now we've begun another leg to the downside. The pullback to the BBC holds more often than it doesn't. On the 30-minute chart, the sideways trading has given us not a trigger on the short side or on the long side. When you see on your 30-minute chart price chopping above the BBC, below, above, below, above, below, that's not good soil. That's not fertile ground for trading. And so you need to either go find another market, walk the dog, make a sandwich, whatever it is you do when you don't have good trade opportunities. Now we're printing a red candle on the 30-minute chart, so we have a nice window of opportunity coming up right there. Roughly 39.55 down to about 39.43. Now that's very conservative, okay? Because I want to make sure this candle gets well below blue and climbing, which is directly below price, so it's potential support. Got to get through that. And then the previous support was down here at 39.39. However, buyers could come in early based on this low. And if that happens, you want to be prepared to take your profit here. 39.55 to 39.43. That's a pretty nice opportunity. 12 points, $50 a point, $600 per contract traded. Now, price rarely travels in a straight line, okay? These candles look like price traveled in a straight line, but I assure you, if you look on a smaller time frame, they didn't. It would not be unusual for price to come down, enter the window of opportunity, and then go back to the trigger, make another attempt, and go back to the trigger, and make another attempt. When you're trading larger time frames, if you move your stop to break even early on in the trade, it guarantees one thing: you will get stopped out. It's that simple. All right, moving on to the Dow. On the Dow, CTA short number was 31,200, and we dropped to 31,190. So that's 50 bucks. And it looks like there's about another 50 bucks here. Price pull back to the BBC. The pullback holds more often than not. And then we triggered 31,200 again, and We travel down to 31,148. We'll call it 31,150. That's 50 points at $5 a point, $250 per contract traded. Price then pulled back to the BBC again and triggered with red and falling. That's what you want on a short. And the trade to target on every short trade is always the weekly trading zone below. On a long trade, it's the weekly trading zone above. So this zone is 31,060/31,065. And the swing low so far is 31,078. So we'll call it 31,080. That's 120 points at $5 a point. And the price is sitting right on top of blue and climbing, but we're below the BBC. So until price establishes itself above the BBC, and as you'll notice, every one of these candles that spike the BBC, they're all touching the BBC. So that means the pullback held. On the Russell. Market opened right at the weekly trading zone, consolidated for a few hours, and it attempted to move up, came right back to the weekly trading zone. When price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance. So we got above the BBC. We're not touching the BBC. Head fake, that's where your larger time frame, your daily chart, will tell you what to expect. And here we come right back down to the weekly trading zone. We spiked it, we pulled back to the BBC, and then with red and falling, we made it down to the short trigger at 1828, and we put in a low at 1820. Basically 8 points, $50 a point, $400 per contract traded. On the NQ, first trigger right here took us down to 1289.50, so to be conservative, we'll just call it 1290. That's $200 per contract traded. Right here, price basically got rejected. This is where your smaller time frame trigger chart is very important. You need the right conditions, which you learn in the live training room every day, to know whether you should take this trade or not. Price then pulled back to the BBC, the pullback held, and down we come again. This time we put in a low at 12.080. That's $400 per contract traded. And then here we put in a low at 12.93. That's $140 per contract traded. On crude oil, two-sided action. 86.85 was the short side. Here's the opening candle last night right at the weekly trading zone. Price comes down to the BBC, the pullback holds. We move up to the zone holds, and that sends us down for a leg below the BBC, pull back to the BBC, and it holds, and then down we go along with red and falling, and from 86.85 we drop to 86.60, we'll call it, $250 per contract traded. Then we got back above the trigger. This time we dropped to 86.65, $200 per contract traded. Back above the trigger, dropped again. This time 86.70, $150 per contract traded. Price pulls up to the BBC, the pullback holds. Down we go. And we hit 86.20. So that's $650 per contract traded. And this little move here dropped to 86.75. It's $100 per contract traded. And then we get back up to the zone. Down we come one last time to 86.40, which is $450 per contract traded. Then we triggered on the long side, and the very first trigger took us all the way to the trade to target, 89.60. So 75, 60, 135, $1,350 per contract traded from the published entry to the published target. Then price gets back below the CTA number. Once an alert triggers, there's a greater probability it's going to trigger multiple times than not trigger multiple times. And so from 88.25, we make that $1,300 trip back up to the zone overhead, 89.60. We've now gotten above that zone. The price is always trying to get to a zone. Always. This is the highest weekly zone this week for crude. So it's got plenty of room to run on the upside. On gold. Price came down to the trigger. I didn't put in the vertical line. There we go, 16.30. Price came down, didn't quite make it, and then it's just been consolidating sideways. This is a market you really don't want to be in. This is a market looking for direction. The 30-minute chart will tell you when price has found a direction. When price is above the BBC, you buy the pullbacks. When price is below the BBC, you sell the rallies. It's quite simple. But when you've got congestion like this, it's a market best left alone until it makes up its mind what it wants to do. And that's driven by the institutional traders who are watching this on a daily chart, a weekly chart, and a monthly chart. We're below the BBC at the moment. We've got red and falling overhead. We're printing a green candle. A break of this low right here at 17.11.12 would send us most likely down to the weekly zone below at 1709/1710. But as far as the CTAs go, no trigger. On silver, 1924, we dropped to 1921.5. It's $100 per contract traded. And then price got above the BBC, red and falling, turned to blue and climbing. Bearish, bullish. So from 1955, we hit 1957.5. That's another $100 per contract traded. 2 pennies is $100. We pull back to the BBC, the pullback holds, and then go from 1955 to 1962. At 7 points, $350 per contract traded. And then it did it again, and then it did it again. And now we're just consolidating here at the weekly trading zone. Now, this high right here, bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area, expect resistance. We didn't quite make it all the way up to that area, so if we take out this high, I would still look for resistance around 1970, and only once price gets above 1970 and holds the pullback should you attempt trading it up to the next area of resistance, which is around 1991. And the euro, no trigger. We've basically been consolidating and oscillating around the weekly trading zone. We're above it, we're below it, we're above it, we're below it, we're above it. There's no direction to this market. It looks like it's going to make a run to the upside, and then it comes right back down to the zone where it's been consolidating. If price can take out these swing highs, you've got to look over here and see where your resistance is. So you have a small window of opportunity there, and then once you get above those swing highs, you have a small window of opportunity up to the zone. But as far as the CTAs go, no trigger. Which brings us back to the daily chart. If we can close above blue and climbing, then we'll most likely make a move up to the step line, the 38% reverse fib, and the daily BBC, which will then give us another leg to the downside. If price closes at the low of the session, then look for a move first to 3,900, then to 3,888. Okay. All right, let me check and see if Garrett's here. Here, let me text him and see if he's ready. Now, Garrett's in the process of learning our methodology and strategy. It's not the strategy that he used when he was a money manager on Wall Street. He looks at very long-term charts. You'll probably see him show you a chart that goes back to the early 1900s. But he also wants to know how to trade intraday. And so it's a process. All right, he'll be here in 2 minutes. So we'll take a 2-minute break, and we'll pick up with Garrett as soon as he logs in. FRN.net. First thing you do, number one, you show up for class every day and trade in sim, even though you don't know what you're doing yet. Listen to Michael or Valerie, whoever's taking off trades, and do your best to follow along. Get used to pushing the buttons. And you continue to do that until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Only then do you consider trading your live account. The blueprint will tell you when it's time to add your first live contract because you've put together the 10 consecutive days in a row. And then it will say, is that you, Garrett?
Yes, sir.
All right, I was just killing time waiting on you.
Okay. Sorry to be a little late.
No, that's all right.
I had a couple of charts that I wanted to, I had to polish up a little bit.
Okay, I'm going to send you the screens.
Okay.
There we go. We can see the S&P 500 Daily Cash Index.
Yeah, we'll start backwards here while I figure out how to, okay, there's what we wanted to do. You know what? Let's go big picture first.
Okay.
Let's do that. And I'm going to move this out of the way because I want to make that bigger if I can. Let's see. Okay, well.
Well, I can see it pretty clearly.
Let's see if.
Unless somebody's watching on a phone or something. There you go. You made it bigger.
Yeah, hopefully that's clear.
Yeah, we can see that.
This is the Dow Jones. It's going back to, this is 1921 in the very lower part of your chart where I'm moving my mouse around. Mm-hmm. That's 1921, the end of 1921. The point on this chart, I mean, there's lots of points on this chart, but the numbers that you see highlighted are years ending in 2. And it's important to point that out because on seasonality, you know, we already know a lot of things. We know that seasonality usually bottoms around October, and then by November turns up and goes up until May, and then the terms sell in May and go away. That's the normal year seasonality where half the year in general is going up into the summer, and then it's going down into the fall.
We just lost your audio. Oh, almost came back. I don't know if you could hear me or not, so I'm sending you a text.
I'm going to try.
Okay, now I can hear you.
Can you hear me?
Yeah.
Stay with me.
Now I can hear you.
I'm back?
Yeah, I can hear you now.
I have no idea what happened. I'll try not to move a muscle. Okay, good. Wow. Okay, just when I was getting to the good stuff too. Okay, Peter and Eliades and I, many years ago, were aware of this seasonality. And then a fellow named Norm Fosbeck wrote a book called Stock Market Logic. And he talked about the seasonality of the individual months, where if you bought on the last day of any month and held it until the first, after the first 4 days of the following month and sold then, that you would outperform the market monumentally. And he proved it and ran his study from, I don't know, whatever it was, 1929 to 1974 or something. I'm just doing that off the top of my head, but I'm not far away. Peter and I were impressed by that study and decided, what if we could break it down further and find out specifically what those days are each month, not just the last day of the one month and the first 4 days of the next, but maybe if the individual months actually had their own seasonality. Mm-hmm. We found out that after almost going blind, going back to 1926 and bringing the numbers all the way up to 2005, which was just an incredible process. But anyway, after a long time and a loss of vision, we got those dates and found the specific dates for the individual months. And again, it's a generality, but it works. This is fortunately bigger picture, which a lot of times are a lot more easy to grasp, and you can take a look at a long period of time and see what happened, and then be impressed by it or not. What these Gann talked about 60-year cycles. Other people have talked about 40 and 20-year cycles. By the way, Gann talked about them too. But these are major long-term cycles. And I talk about, and I'll show you on my next slide, but I've always said every 40 years or so, something bad happens. Every 80 years or so, something really bad happens. And the reality of that comment is every 80 years or so, it's 2 40-year periods with a plateau period in between of about 10 years. But, I didn't want to make it a major compound sentence, so I just kept it down to simplicity. But what you can see here are years ending in 2. I mean, one of the greatest ones of all time was this one in 1932. And by the way, if you go back 90 years from this point to, I believe it was March, this is July of 32. If you go back to March of 1842, you will have the other major wipeout low in U.S. history. There's only 2 of them. They're 90 years apart, from March of 1842 to July of 1932. And guess what happens if you add 90 years on this, 90 years and 4 months? It takes you to, I believe, November of this year, July, let's see, August, September, October, November. It takes you to November of this year, which would say, if it was like the other 2 predecessors of these major 90-year cycles, that you're going to have a wipeout sometime into the latter part of this year. And in addition to that, it's also a year ending in 2. In addition to that, it's also a 20, 40, and 60-year cycle. So there's a whole lot of stuff, not just 1 or 2 things that should get your attention here. That 90-year cycle, and I probably can find that chart. I think it was in one of my, we might have talked about it before, and well, I think we did on one of my prior newsletters. I put that chart in there, and it shows this 90-year cycle. But here's the second one. The next one's over here. In addition to that, it's a year ending in 2. And look at these. Here's 1932. 1842 was like this, a horrendous wipeout. There's 1942. That's a major low. 1962, major low. 1982, the low that launched this bull market. That's the last time the market sold at book value, had a PE ratio of about 6 or 7 and a yield of about 6.5%. We're a long way from that now. In between this, by the way, you had 2002, major low. So all these years ending in 2.
Now that's all technical, but the fact that you mentioned November, I will remind the audience that we have midterm elections. And the potential to swing both the House and the Senate from blue to red. It takes 10 seats in the House and 1 seat in the Senate.
Wow. Well, yeah, I mean, we're at major things, and you're on the Christian Radio Financial Network, and there's a whole lot of things biblically that are seemingly to point to this time as well. I mean, not necessarily November, but certainly in the time we're in, it appears to be.
I'm anticipating substantially lower prices without even thinking about the fundamentals, such as the midterm elections.
Right. And the one thing that spooks, that's a little spooky, and it's meaningless on this chart, but if you look at March of 2020, and remember what a horrendous, what was it, 1 month, 35% decline?
We've been in a downtrend this year. You're talking about this year? We've been in a downtrend since March, yeah.
Yeah, and what happened after that is that the economy got much worse due to the pandemic, and of course due to Joe Biden, but due to the pandemic, you had this horrible year of Trump where they really attacked him, and they did it with a pandemic that in truth, regardless of what we've been hearing from our news media, which consistently lies to us, but a pandemic that didn't kill anybody any more than the flu.
Nope.
and the point wasn't the pandemic. Their point, and there's plenty of proof on it now, but we're also at a time of major censorship. There was a big study that came out on ivermectin showing that, number one, it's very safe. Everybody knew it was safe, and that it's very effective in COVID. And that's coming out now, but it was available before if you looked at it. But when that came out, I Googled ivermectin the other day, and the first things that come up are dangerous, don't take this for COVID, blah, blah. It was a complete lie. Total, complete lie. And then I saw all the talk show hosts talking about ivermectin. If you're a talk show host, why would you be talking about ivermectin? You might talk about COVID, or you might talk about the economy, or you might make your jokes about here and there. But why would you give medical advice on a talk show host?
Right.
On a talk show, pardon me. Why would a talk show host be giving medical advice? And they all did it. Fallon, Colbert, Kimmel, everybody, Myers, all these guys, they all came out with this.
Colbert's ratings right now are barely a blip on the radar screen.
He's one moron among many, and he's not a moron. I mean, these people aren't stupid, but these people are crooked. And I don't think they're unknowingly crooked. At that level, I think they pretty much know what's going on. And even if they don't, it's like, hey, here's your check. I want you to say this, period. And they do. And you've seen probably those telecasts where they show, 50 telecasts at the same time, and they keep the voices recording, and everybody's saying the same thing. We're being brainwashed. I've said it 1,000 times, but I won't bore anybody on this. People will wake up to this at their own pace, and it's probably not my.
Unfortunately, it may be too late for too many.
Yeah, it is. I mean, I tried to tell people. I said, look, I know. The thing that gets me, or that I find, let me put it this way, that I find to be my greatest challenge, for whatever reason, in 1972, I heard Henry Kissinger say New World Order. I have no idea why, other than the good Lord, but that went off in my head with flashing lights and everything else. And I didn't know what New World Order meant. I had no idea what it was. I mean, a number of years before that, I had something similar hit me, internally and mentally or spiritually, whatever it was, about gold. And gold had been stuck at $35 an ounce forever. But I saw something that got me onto that. And then in 1972, when Kissinger said that, it just went off. And I didn't know then what I know now, that, God communicates with all of us in different ways. And
yes, he
that's
does.
apparently, everybody has different things. And I'm sure some people, I've heard, stories from friends that are terrific, but, remarkable meditations and stuff like that. But like I say, the communications come different to different people, and that's apparently how they come to me. And I started the study on the New World Order. What the heck does this mean? Why did he say these words? About 50 years ago. And thank goodness, after 50 years, even a guy like me might be able to pick up something. I mean, literally after 50 years, I can tell now what's the truth, what isn't the truth, and at that time, and I've mentioned this on your show before, I read the elite's plan, and they said that their goal is world domination, period. And how would they make that happen? They would make it happen via debt. Oh, and by the way, the two areas that were targeted were Europe and the United States. Why? Because those were the two bastions of freedom on the planet at that time.
Right.
And they needed to break those areas down and ruin their economies. Just in history is the same. If you go back hundreds of years, you've got what? Kings and serfs.
Mm-hmm.
When things got bad, the serfs might get mad and want to take over the throne or rebel. So what they would do is they would send, some of the knights out to one of the quadrants and get squabbling going between the serfs. So the North Quadrant might fight the West Quadrant while they're planting the same seeds, and having the South serfs and the East serfs fighting each other. After they beat each other up and they've got nothing left, they come back with their tail between their legs and drag back to the king to help them out. That's exactly what's going on here. What they said they would.
Netflix has a original show, The Crown, which has been very popular for a very long time, but I was never motivated to watch it until last week's events when the Queen passed. And I spent some time over the weekend watching it, and it's really quite good. It's worth watching.
Yeah, there's some interesting things that I ran to in my years of studies, specifically about the Queen, that are overwhelmingly interesting, but not anything I'm going to discuss out of respect for
Right.
somebody who just passed.
Yeah,
So,
in fact, they stopped production of the current season. I don't know when they're going to resume. I assume they will resume because the show has very high ratings. So they're just giving some time out of respect.
Yeah, it's amazing. It's interesting on this. Oh, to get back, going back to the goals of the New World Order people was world domination. And how is that going to happen? Well, we have to remove, or we have to seriously weaken the two bastions of freedom. Because if we don't do that, there's no chance of us taking over. And there's another thing that they had to do too. They had to remove conservatism, because when you remember, if you go back to the 1960s, both Republicans and Democrats were conservative. So it wasn't a question of conservative and liberals. There weren't any liberals.
Mm-hmm.
There were conservatives and conservatives, and they had, minor variances of thinking about things. But you know what? They, for the most part, believed in God, had reverence to God, had two sexes. Imagine that. There's quite a few more now from what they tell me. I'm too slow to pick up on that. And in addition to that, you had to introduce liberalism. Otherwise, it wasn't going to happen. If you maintain conservatism in Europe and the United States, the New World Order has no chance, because conservatives are going to continue to hold on to conservative values. They're going to believe in God. They're going to believe in the Constitution. They're going to believe in the Bill of Rights. They're going to believe in America. They're going to believe in freedom. They're going to believe in capitalism. And one nation under God, with liberty and justice for all. That's what they're going to.
Give me liberty or give me death.
Give me liberty or give me death. United we stand, divided we fall.
That's right.
That's ingrained into the conservative mind. And that's why these people have no chance under conservatism. So they had to change that. And the way they began to change it, what they stated in their original works that I read, was that they would do this via debt. They would create debt. And just as debt ruins the individual, when you finally get to the point, we individuals, unfortunately, don't have our own printing presses.
Right.
So when we get in trouble, and it falls squarely on our shoulders. And that was what happened. One of the things that happened with the pandemic. What did it cause to happen? Well, it caused the New World Order companies, those big corporations, to do better than they've ever done before. Amazon went through the roof. What was everybody doing?
There's an issue with your audio. Are you moving the cord or anything?
Oh boy, how about now?
Yeah, it's perfect.
I have no idea what's going on, and I'm not going to move.
Okay.
This is such an important point. When they created what they call COVID, which was nothing more than the current 2020 version of the flu. But nonetheless, once they did that, they utilized that to stop the economy. And what happened is that people were sent home. And when they were home, you had a stock. In other words, you've got a slowed economy. People are home. People's businesses are going under. So the economy, obviously, by definition, is bad. Was it worse than when Trump was in there? Forget the politics. Let's just Trump's a guy, Biden's a guy. Forget the politics. When Trump was in there, when just before COVID, was the economy better than at any time since then? Well, obviously, I don't care whether you hate him. The economy was much, much better than at any time since that time. What did the stock market do?
Hey Garrett, can you try unplugging your mic and plugging it back in?
I just did that, and
Did you? We're not losing your voice. We're just getting like a sort of a clicking sound.
Hardware or not right now. I can't understand what's going on here. This should be. Am I coming through now? Am I coming through now? Can you hear me? Hang with me. I'm going to try something.
Try it again.
Stay with me.
Okay.
Can you hear me?
I can hear you. Sounds like you're far away, but I can hear you. I heard that. Oh, Garrett, I can't hear you at all now. All right, guys. Garrett's going to try to switch to his earbuds and see if that'll work.
Volume maximum.
Hi, Garrett. Yeah, I do.
Is there any way we can do this over the phone?
No. What happened to your earbuds? They didn't work.
I had used them for a while. I was using the other thing. I got to figure out how to go in and sync them up to the computer.
I mean, at the beginning, your microphone was working fine.
Boy, I just have no idea what happened there. But let me see if I can
Just plug it back in and try it one more time. And
okay, let's see what happens. Is this working?
I can only hear you on my phone right now.
Let me see if I've got. Hello. Hello.
Nope, nothing yet.
Hello. 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 Let me try one other place to plug it in. Is this working?
And when it asks you, do you want to use this device, click yes.
Oh, let me just go not right now. So I don't want to change it over. Am I coming through now?
No.
No? Okay, let me go back again
If you'll plug it in, and when it says, do you want to use the device you just plugged in, say yes.
Hello?
Hello?
It says unable to show. Yeah, boy, I can hear you now.
Yep.
Can you hear me?
Yep.
Okay, we'll get off the other thing. I'm so sorry, I have no idea what happened there.
That's okay. It happens.
Fortunately, I'm in California. We had our, in the last week or so, we had, is there music there? You hear music?
I do.
What, is that on?
It's not
I don't
on.
know.
It's not on my end though.
I have no idea.
If you're using, are you using some kind of wireless headset?
Yes.
It's picking up some local radio
No,
frequency.
I'm sorry. No, it's wired.
Mm.
Bear with me. Gee, I have no idea what's going on.
It's playing that music right there.
Okay. Wow. There's some information that I'm giving out here, apparently, that they don't want out. Anyway, let's go back.
That's it, Big Brother. Yeah.
Big Brother's not liking what I'm saying for some reason, so I'm not meaning to offend anybody. But what I was saying is that in order for them to accomplish their goal, which is complete and total world domination, they would have to bring down Europe and then the United States in that order. They would do so by essentially three things. One was debt. They would create debt through the various central banks.
Right. Which they've done a very good job of doing.
They would have to change the political structure of each area from conservative to liberal. In other words, they'd have to create liberals. And number three, if they still were having problems, they would utilize immigration. Now let's think about, now again, this is 50 years ago. Liberals, by the way, was not the term that was used. The political structure would have to change. There would have to be a change in the political makeup. That political makeup was conservative in Europe and in the United States. That's the normal political makeup. That's the base. Conservatism, conservative thinking is the normal base. It's obviously the base when you have the republic. I think it's probably, I think it's the way we're supposed to be. I mean, obviously it's God's way, right? When the conservatives believe in God, you're not going to pull that away from them. They believe in the Constitution, the Bill of Rights, law and order, all these things that we're being pulled away from. And how people's minds can be pulled away from things that seem to be so ingrained into us, number one, and you can tell whether they work or not. How did America go from a nothing little country that nobody really cared about or knew about to one of the greatest empires of all time? How did that happen? Well, it happened through the embracing of conservative values. I'm not talking politically. I'm talking just the general feeling of humanism. Mm-hmm. That's a connection with God. Well, why would we talk about a connection with God? Well, gee, we're sparks of God. That is our connection. So we appreciate that. We're thankful for it. We're grateful for it. We show gratitude and appreciation to that. And from that comes God's structure. And what's that? In our case, on our level down here in the third dimension, it turned out to be the Constitution, one of the greatest documents of all time. So you have God, you have the Constitution, the Bill of Rights. This is all about what? Freedom. Mm-hmm. We're meant to be free. God wants us to be free. These people want to control us. So what they've done, and this is sad, it hurts me that so many otherwise intelligent people can so quickly and easily fall away from what should be obvious. In other words, the way we should be, How about how about just basic things? Should we kill one another? No, we shouldn't. Should we lie, cheat, and steal? No.
So that's one of the Big Ten. Don't lie, don't steal, don't covet your neighbor's ass.
Exactly. I mean, there's so many things that it's just obvious what we should and shouldn't do. And that gets down to basic right and wrong. We're not talking right and left. We're talking right and wrong. Don't care what your politics are, but don't forsake right and wrong. And that's the problem here. What they've done is they've screwed that all up. and in the process, I mean, many people have said this throughout history, but if you promote a lie on an ongoing basis, pretty soon that lie will be accepted as the truth. And we've got example after example of that in the last 10 years. I mean, it's just gone up off the charts. And when it should become so obvious to people, the people that are brainwashed on the other side, and the ones that bother me the most are the ones that are otherwise intelligent. And what I've told in discussions to some of those people is, look, they targeted you. They didn't target the uneducated or the ignorant people. They targeted the intelligent people. Because if you can get the intelligent people believing a lie, then whether trickle-down economics works or not, trickle-down from intelligent people does work. It's going to influence.
A lie repeated enough times becomes the perceived truth.
Absolutely, and they knew that. So I saw this. This is what they did, and now 50 years later. And by the way, when I read this, my thoughts were, well, fat chance. This has no opportunity of success whatsoever. I mean, there's no way that they're going to change Europe and change the United States and so forth. And then over the next 50 years, I went, oh my. Oh boy, and piece by piece, I saw this happening. I saw the debt buildup, and it became parabolic, didn't it? It wasn't just a little debt buildup here and there. It was parabolic. And then, we have nothing more than the flu, and we turn it into a pandemic by changing the definition of pandemic and doing a bunch of other things. But anyway, that's what happened. And now all of a sudden, you've got a situation where I was saying people are not able to go and tend to their businesses, so they lose their businesses. And what's the heart and soul of America?
Small business.
Bingo. It's the small businessman. They are the heart and soul of America. They're also the heart and soul of Europe. So when these people lost their businesses, some businesses
they also pay the most taxes.
Yeah, exactly.
Because the ultra rich can afford the attorneys, the accountants, the brilliant minds that put them in a position that they don't have to pay any taxes.
They've got the special trusts and other things that do that. And if they do pay any taxes, they'll have the same stockbroker that Nancy Pelosi has, and they'll get it all back. Anyhow, I mean, the greatest way that they got it back was this. When the economy was ruined and the stock market should have fallen through the floor, it didn't. Why? Lots of stocks did, by the way. A whole lot of stocks fell right through the floor.
Yep. And stocks can go to zero and below, but the indices never will.
I mean, look at the Peloton. I mean, there were just so many of them that dropped 90% or more. And but what did the FANG stocks do? Well, they went through the roof. Well, why? Well, because people were home. And what did they do? Well, I guess I'll go on Facebook. Well, who owns Facebook? Well, Mark Zuckerberg. Is he a globalist? Does a bear, Okay. I mean, duh. Yes, he is. And what about Bill Gates?
Catholic. Yeah.
Bill Gates, the great, and we say Bill Gates, the great medical authority. And you go, well, wait a minute. Not a medical authority. He's the great technical guy, right? I said, well, yeah, that's what I thought too. But apparently he's the one who's backing all of these vaccinations and pushing them all over the world. So I guess he's a great medical authority. And, oh, guess what? He's great friends with Warren Buffett. And gosh, Uncle Warren, he's not a bad guy, is he?
And he owns more farmland in the U.S. than anyone else.
Why would Bill Gates own farmland?
Right.
Oh, because he's an intelligent investor. Oh, really? Or is it because he wants to put Roundup in that soil and ruin it so we don't have any, you know, I mean, I can't, it does no good for me to expose the truth because those people who don't want to hear the truth won't.
He wants to use his GMO seeds is what he wants.
Look at all the things. I have a great dentist, literally great. But you know what? They want to use fluoride on me. I said, why would you do that? I said, fluoride. I said, if you look at the history of fluoride, you wouldn't touch it for any of your patients. And I said, I know you guys are real good about your patients, but you've been brainwashed by people telling you that it's good. I said, fluoride is a remarkably good rat poison. It doesn't do a darn thing for cavities. And if you're reading stuff, it's like reading the same stuff that's telling you about all this serious COVID and how wonderful the vaccine is for you. You got the same writers telling you about fluoride. There's nothing in fluoride that will do anything good for your teeth at all. And yet the same thing as lies. I mean, it was Rockefeller who invented the drug industry. And guess what? Did he have a drug doctor? No. Oh, no. That wasn't the doctor that he had for himself. Anyway, I don't mean to digress. Getting back to this chart, what they had to do was exactly what they did. And has it had any effect? Yeah, it's worked perfectly. So much
There's
so.
a very real chance that some people in Europe may freeze this winter.
Oh, well, that's the plan. Nobody cares. You know, these people don't care about the people. Their main agenda.
Population control.
Exactly. But their number one agenda, of course, is to take control because you can't do what you have to do unless you got control. So number one, make no mistake, they want control. And they control the money and they control the press. Now, they control a lot more than that. They control politics big time from either side as well. But they control these people are remarkably smart. And they control the press. That's the first thing they do. They get the money that they have, and they've got the money, and they buy out whoever, you know, the major news media in all these countries. So first they do the banking, because that, you know, when you can, what did the Rothschild say? You know, I can't remember the quote, but it's great. It's like, if I control the banking, I control everything. And that's true. You know, who did Jesus throw out of the temple? He didn't throw the politicians out, did he?
No.
Were the politicians bad? Yeah, the politicians were bad, but he didn't throw them out. And he didn't throw out the doctors that weren't doing the right thing. And he didn't throw out the chemists or whatever. No, he threw out the bankers, didn't he?
The money changers, yeah. That's exactly right.
The money changers. Jesus knows what he's doing. You know, those are the guys. And it's the same thing. Nothing has changed. It's the same thing. And what they've done now at this ultimate time of good versus evil is that they've changed everything around. They've made evil good and good evil. Haven't they? Isn't that exactly what they've done?
Mm-hmm.
I mean, in other words, if you're conservative and you love God and you love the country and you want to protect the country and you love the Constitution and the Bill of Rights and you like law and order, you don't like people getting murdered on the streets, and you don't like people pushing drugs to children and all these other things.
Yeah,
and you don't
and laws now allow castration of young boys, pre-puberty, and hysterectomies of young girls, pre-puberty.
And worse than that, when you get into the I didn't know this. I just saw this yesterday. I mean, they were talking about adrenochrome, and, you know, I'll let people look it up. But in the movie Fear and Loathing in Las Vegas, which was in 1998.
Hunter S. Thompson, that was one of his greatest novels. Yeah.
Yeah, I read the novel. I thought the novel, you know, I wouldn't recommend this novel to anybody because it's not about anything good or Christian. Right. But the book, to me, was far better than the movie. But Johnny Depp was in that movie.
Yeah.
And he was having his guy, Dr. Gonzo, I believe his name, take adrenochrome. And boy, when people find out what adrenochrome is, maybe I'll post something on your site about what that is that has that. It's unbelievable. I mean, this is evil beyond evil. I mean, this is the definition of evil. Okay, they did that. They've done it. They've succeeded. And in my view, without the help of the Almighty, we're in deep trouble. And so my prayers, number one, go to that. Save freedom for mankind. Don't let us go. Anyway, getting back to the point on this chart, all that other stuff is what's gone on. It's the truth about what's happened, and it should be obvious to people. But on this chart, if you don't believe any of that, let's just take a look at the chart. Years ending in 2 frequently are very bad years for the stock market. We happen to be in a year ending in 2.
Yep.
These things that we're looking at, the little loops on the bottom of the chart, those happen to be 20 and 40 year cycles. And they're going from 1922, you can see the low there, 1942, you can see the low, 1962, you can see the low. I guess I can do that with my pointer. 1982, you can see the low, 2002, you can see the low, and now. So when you look at this, we're going back 100 years. I mean, low, 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 big, I mean, these are big time lows. Real big time low here, the birth of this entire move, big time low here, and here we are again. So what happens in these 20-year cycles? Apparently you get lows. So I'd say, guess what? Don't be on the lookout for a new high. Maybe the thing to do to be useful is to maybe be on the lookout for a low here. Now, that's a 20-year cycle. Well, that's just luck. Let's see what the 40-year cycle does. 1942, big low. 1982, big low. And gee, I don't know, this year. Well, okay. Let's try the 60-year cycle. This, I can't go back 60 years here, but here's 62, and 60 is where we are now. That's a big one for Gann. And Gann was probably the most successful trader of all time. So the 60-year cycle to him is a big deal. Just out of curiosity, what did I say that, listen, the prior big low was 1842. 60 years on 1842 is 1902, which I believe was a low. 1902 and 60 years is 1962, and here we are again. I mean, these things are incredible, and they're showing that these are not random events. One of the other things that they want you to believe, by the way, is random. Oh, everything's random. There's no cycle. Everything's random.
I had that guy on the show. Did you join the show that day? I think John did. The guy who wrote the book, Random Walk Down Wall Street.
Oh yeah, it was very good that I wasn't on the show. No, I mean, because number one, it's a show on him, and I wouldn't.
Well, I told him on the show that we had opinions that disagreed, and he still agreed to come on. He's rewritten some work now where he takes a step back from some of his original theories.
Well, I can't remember the name of the guy because it was many years ago who wrote a book. There's lots of guys who have written, random stuff. Can you still? I moved around. I just hope.
No, you're still clear.
Okay. But I came up after a guy was talking. I think I probably said this on the show before. But what happened is interesting. He was talking about that, and I didn't want to be challenging in front of a bunch of people because, he probably, he's there to promote what he was doing. But I brought up Norman Fosbeck's book, and I said, he did a study, and I talked about that by the last day of the month, sell after the fourth day of the new month. Right. And I said, do you know what the Do you know what the numbers are in this? And I don't. I've got the book there. I can probably read the paragraph to you if under pressure. But just from memory, by doing that over a certain period of time that led up, I think, into the mid 1970s, the results were overwhelming. By just having, I said, I'll tell you what. I said, if you're talking about random, I said, then one day is the same as the next, right? I mean, no day has anything any different than any other day or any month or any year for that matter, right? And of course, since he's saying random, he's got to say, yeah, right. I would get him to agree with me. So I'd say, if I were to take certain days of the month and give you the other days, it shouldn't make any difference. I mean, over the long term, right? He said, yeah, absolutely. I said, well, I'll tell you what. I said, I'm going to buy on the last trading day of every month, and I'm going to sell after the fourth trading day of the new month. I said, there are 21 days on average, roughly 21 days, trading days every month.
Yeah.
So I'm going to take 5, and I'm going to give you the remainder, which would be 15 or 16, right? He said, yeah. I said, so you've got 3 times as many days as me, right? He said, yeah. And I said, so you should do 3 times as well as me, right? And he was kind of hesitated on there. And I said, listen, I said, I will make a big deal about it, but theoretically, you should. I said, I will show you the result. I can read you the results of the study, but on one of them, when they started with $10,000, it went up to something like 300,000, and on the other one, it lost 90%. And this is over many decades. I mean, it was overwhelming. It wasn't even close, and it should have been 3 to 1. You know, if I average, 2%, he should average 6%. So it was completely the opposite. Wasn't even close. So anyway, I just remember that. On this though, this is compelling. It's beyond compelling. It's kind of overwhelming. You can see these. I didn't put in the 60-year because I mean it would go from here to now. So
right.
It's only one of them. So what's the point? But I do have a longer term chart, and I think I'll dig that out and do that because it's meaningful. Now let's look at this. This is where I talked about my comment. Every 40 years or so, something bad happens. Every 80 years or so, something really bad happens. After 40 years, you get a serious recession. After 80 years, you get a depression. Again, the reality of the comment is that when you have that first 40-year period, you have a period of setback or digestion of the debt, I call it. That started here in 1973, 40 years from the economic low. When they closed the bank was 33 plus 40 is 73. It's not meant to be perfect, but it happens to be. And then you have this digestion period of about 10 years, 73 to 83. Well, what happened? There's the 82 low. What happened in 83? You eclipsed this point right here. So that's the new one. You had a 10-year period of digestion, sidewards movement after the peak in debt. You had a big serious recession. You bounced around, you had another serious recession. This is the one, ironically, in 1982, where they thought you'd have a depression. They didn't necessarily think that in 74, but in 82, they were looking for depression because interest rates went over 20%. And look what happened. You bottomed. So this is the digestion of this 40-year period of debt buildup. So you have a plateau period of 10 years. So 40 years plus 10 years plus 82 and 40 is what? Oh, 22. So here's another 40 years. Now we're going to have a digestion. And frankly, I don't think we're going to digest this one. We might have a
right up there where it says volatility begins. That's the .com crash. And then where you got labeled B, that was the mortgage-backed securities crash, which led to the Great Recession.
Now, let me show you something that's wild. I can't see these lines. Mm-hmm. I mean, here you get this huge run here, just like this run here, 42 to 66. and 82 to 2000. Okay, but you can see it. They're essentially uninterrupted monster bull market moves. And what are they from? Well, they're from the debt buildup. You know, you build that. In other words, as the debt's building, everything's growing. People are taking on debt for more expansion. Then you overdo it, and you have to digest this. And then you have to. It takes, in this case, two pretty serious recessions.
And that's when that 74. That's a period when when interest rates went to what, 18%.
No, not 74, 82.
82. Okay.
I'm sorry, not 82. It was 80. It happened in the 1980s when they first went over 20%, and then November of 1980. In November, I believe, of 1981 is when I think the interest rate peak was. Your interest rates were way up there, and they've been dropping pretty much ever since. But look at this. This is when you after that run. Here we had this big run coming into here, okay, and the first part of it was over here on the chart. You can't see it, and you had something like this. It looked like this. It came up, it came down, it came up. This part here is right over here, right at the very beginning of the chart, and I drew in this kind of a low, lower low, high, higher high. I did this. What's that? It's
bugle
a megaphone
pattern. Yeah, megaphone bugle.
Yeah, and look over here. Here's where this one is. It goes through here, runs up to this high, goes through here, runs up to this high, has a little correction, goes up, and what happens? Then you get a big correction here, and it comes up through that a little bit higher. What happens here? It has a big correction here, and it runs through. In other words, you've got the same pattern. And what's this period here? This is an extreme overshoot when things weren't really better, but the market just did that for whatever reason. This time it did it because of the pandemic and a windfall money grab for the elites. They took the backbone of America and put them out of business, and then they forced that consumption into their areas. Facebook, Apple, Amazon, Netflix, Google. Think about that.
The new robber barons.
Exactly. It's exactly what it is. And think about those stocks, and there's others. But if you're sitting home, you're not working, you're opening up your computer, what are you going to do? I'm not going to do it, but most people, and you're going to be on Facebook. Why? Because you're bored and lonely, I guess, but you're on Facebook. You're on your Apple. You're ordering from Amazon.
Yeah.
You're watching Netflix, and you're using Google all day long. It was completely set up to enrich those people at the expense of the backbone of the country. For what purpose? To accomplish their goal, which was to bring America down and bring Europe down. When they're down, we take over. How do you get a leader and leaders? I mean, this country's had great leaders. Name Republicans, name Democrats. You can do both. Not a lot of them, but you know, you want to name two of them? John F. Kennedy. Oh, gee, some guy's a Republican. I didn't like him. I don't care. He's a good president. He's a great president. Reagan, before he got shot. There's two, in this era. I mean, going back to when we were younger. But you had John F. Kennedy, a great Democrat, and Reagan, a great Republican. And oh, by the way, they both got shot, didn't they? So if you got great men pushing for freedom and they're getting a little bit too much of a following, what do you have to do? Well, apparently you have to remove them. Huh? I mean, I don't know. I don't make up these rules, but isn't that what happened? When you had great presidents and the country was alive and thriving and happy and proud, what did they call it? When JFK was there, they called America Camelot. Everybody loved America. When Reagan was here, I don't care if you're a Democrat and you hated Reagan, big deal. Nobody else, the rest of the world really respected and honored him. America was respected by the rest of the, forget what Americans think, if they can't, if they got to play their political game. Take a look at the rest of the world. The rest of the world admired, respected, and followed America when JFK was president and when Reagan was president. Like it or not, that's the way it worked. What happened to these guys? They got removed. Reagan's, it's like ham and eggs, right? The chicken is involved, but the pig is committed. If you have bacon and eggs, right? Okay, I mean the chicken's involved. The JFK was committed. Reagan was involved. I mean, in other words, when Kennedy got shot, we lost him. We didn't lose Reagan, but in reality, we did. He got shot right in the very early stages of his term, and Nancy said, "Ronnie, don't fight these people. Don't fight these people. You were lucky to live through that. I'm not going to let you do it." And that's what happens. I mean, this is a sad state of affairs, but that's what happens. Anyway, back to the chart. Here you go. This is so, I mean, I think this first one, when you look at these cycles, you look at these numbers, I mean, how could it be anything else? Is this, am I just making up a crazy story here? Or is this just a little bit more than coincidence? I think it's a little bit more than coincidence, and I'm not making up anything. That's factual. So my opinion doesn't have anything to do with it. Just look at the picture. Same thing here. Who cares what I think? Look at this picture. You've had this expansion here, this expansion, and this crazy extreme overshoot. And we're here. Have we had a correction? Yeah, we've had a correction all year. But we're right up here. We're here in this picture, and the picture goes down to here. So we haven't missed anything yet in this show, but we need to wake up right now. Now, let's do the bottom one here. What's going on? I don't know. I'll look at the chart. This looks like a wave one down in the big picture. Why? Because it reversed and had a correction. I don't have to get in there and count all these waves. I can just stand back and squint a little bit, and I can see that it goes down here and it runs up to here. However, you can count the waves pretty clearly with a 1, 2, 3, 4, 5. One down here, 3 drops, 1, 2, 3, 4, 5, 1, A, B, C, 2, wave 3, wave 4, wave 5. Okay, so we got that out of the way. Here we've got A, B, C, B, and 1, 2, 3, 4, 5 waves for a wave 2. Real clear. Wave 1 down, wave 2 up. Wave 3 is the big wave to the downside. We've already had wave 1 of that down. This first wave was a parabolic. Short here, 1, 2, 3, 4, 5. Each successive wave being bigger. That doesn't usually happen, and that's something to keep your mind on there too. I mean, it's picking up momentum to the downside. That's what a parabolic wave is. Now you've got what I hope is an A wave up, a B wave down, because I'd like to see this rally up to here. And then you get a wave 2, and this, if this is what is to happen, and I don't know because they don't call me up and tell me, but this is what it looks like is happening. And when this gets up to here, wow, you could have yourself a very serious wave 3 of 3 to the downside. You could take this down to much, much lower levels, well below here.
Well below. Well below.
Oh, could you get down to 3,100 or lower? I think you could. What do you think? You're
the 2000 high, the .com high, and the real estate crash high. Those have both been tested from below, but they've never been tested from above. And important prices in important areas are almost always tested.
Yeah.
So that number's down about 1,500. I believe it is.
What's that?
That chart you had with the S&P, you had the Dow up.
Oh,
The high of the S&P in 2000, and then the high of the S&P in 2008.
oh yeah, right around here. Yeah.
Yeah.
So it's, I mean, we, you know, we could.
So
we could.
15,000 has never been tested from above.
No. So anyway, this I think is just really important.
That's a good
to
thing
be
about
aware.
futures. It doesn't matter if the market's going up or down.
Yeah.
In
No,
fact, when it's going down, you make money faster. So
exactly. So anyway, that's the most part of what I wanted to share. When can I give you a call back? When do you end your show?
about 10 minutes after you hang up.
Okay. How about if I give you a call then? By the way, thanks so much for letting me share this with your audience. It's good to talk to everybody again. I'm sorry, I don't know. I have no idea what happened to my.
It's working great now. So.
Yeah, isn't that odd? So anyhow, my apologies.
All right, my friend.
Good to talk with you, Dwayne. Thank you.
Always enjoy it.
Great to visit with your audience again.
All right. I'll talk to you soon.
Thanks. Bye-bye.
All right. And with that, we're going to go to our good word for the day. Don't lose your peace. James 3:18, the fruit of righteousness is sown in peace. The enemy knows that God's word can only be received by a heart and mind that are at peace. So he will do everything he can to keep you upset. He loves it when you get into an argument just before church and spend the entire service feeling bad. That's why you must do whatever it takes to keep your peace. There is power in peace. If the enemy can't get you upset, he has no power over you. He only gains control when you lose it. He keeps you upset in order to steal your peace, confuse you, and make you run in circles. Don't let him do it. Next time you get worked up about some issue, stop and ask yourself, what's the enemy trying to do here? If I give in to these emotions, what will the result be? When you're stressed out, you lose your joy. And when you lose your joy, you lose your strength. Because the joy of the Lord is your strength. Nehemiah 8:10. So it's essential that you exercise self-control and try to keep your peace. James writes, the wisdom that is from above is peaceful. More than that, he tells us that the wisdom that comes from heaven is pure, peace-loving, considerate, submissive, full of mercy, and good fruit. Peacemakers who sow in peace reap a harvest of righteousness. So while getting along with others can be hard work, it's worth it to have peace. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.